All right, guys, it's Paul Singh, the Market Speculator, with the free weekly swing trade report. Let's take a look at the market here. We're getting the biggest pullback we've got in a long time. So that's why we're calling this the big market pullback here. We can see going back 2016, we basically have not had a pullback this swift, this severe, since the Brexit pullback back in summer of 2016. Now, we've had some pullbacks in here, but nothing to this extent. And it's not really that big of a deal yet because we've been so extended. So basically, we could consider the market breaking out, going all the way back to summer of 2017. So we can see here about 6 months ago, maybe a little longer, we had this breakout and we've run from 240 to 285. So if we think about it in those terms, a 10-point pullback is not really that big a deal when we've had about a 50 or 40-point move here. So we're just giving back a little bit. A lot of times these pullbacks are severe because what happens is people get scared. They're sitting on profits long term, and then when the market starts to pull back, there's this kind of effect where there's these initial people pulling out, and then a bunch of them pull out, and then we get to support levels, and that's where we want to see if buying comes back in. If we get buying at these support levels, the market will ramp back up to where it was before, and that's what we've continually seen, is these types of moves down tend to get bought up at key support levels. So we're watching key levels here. We're not making any predictions, but we want to know where these key levels are. So near term, we're looking at the 50-day moving average right at 271.42. We want to see how price reacts to that level. We want to see how price reacts around open gaps, and that's what we're doing today. We basically filled this open gap. We had a gap breakout here and ran, and nothing's really pulled back to that level yet until now. And the market is actually showing strength intraday. So what we want to see is, do we get continuation now? If we invalidate today's pre-market gap down and then start to run up in here, that'll be a good signal. If we clear the 9, that'll be another good signal. And if we clear these two open gaps, that would basically invalidate everything and we'd be back on uptrend. So we're going to watch that very closely. Now, if this starts to break down, then we watch the 50-day and this old range in here. And I think the best thing to do, you could selectively take some shorts. The best thing to do is be patient, sit here and wait. I know it can be frustrating not to make any trades, but probably best not to make any trades. And then when the bounce is in, take a few shots. That could be today. That could be a week from now. But that's what we're going to do. And we're going to do this by watching SPXL. That would be basically our SPY trading vehicle. SPY is really slow. We're not going to make a bunch of profits off it. But if we trade the triple leverage ETF, we can get some good gains. We can do this by using the inverse of UVXY or VIX, which is SVXY, and we're already seeing a big pop in it this morning. And then we can go to Apple, which is bouncing nicely. We could look at Facebook, which is bouncing nicely. Basically, any of the FANG stocks, some of the other movers like NVIDIA. Look at these guys for potential bounce plays, and I'll list them in the blog post here. There's a number of them we're watching, and if we decide to play a market bounce, we can go to these things and take shots at what we'll call rubber band long setups. And then if the market continues to run, we go back to our normal trading style. So that's the plan to start the week. I'll see you guys next week with the weekly swing. And remember, you can join the swing trade report where we go over this analysis every single day.